Hey everybody, had a question about number 4 on the chapter 11 quiz access. So I was just going to walk through it. So it gives us all of these transactions up here and then wants us to journalize them. And we don't really need the transactions since they're repeated here. But so for this first one, we have a company, I think it is that this says A Corporation. We don't know their name. So they issue 5,000 shares of $20 par value common stock for $120,000. So whenever we issue stock, we're doing that for cash is the assumption, unless it tells us otherwise. So our cash will be increasing by the amount we issued for, so 120,000 in this case. And then we're going to have our, let's see, our common stock, $20 par value. So 5,000 shares times the par value of $20. So 5,000 times 20 is 100,000. But we can't leave it at that because our journal entry wouldn't be in balance. So we have to have this other 20,000 coming from somewhere. And what we call that is paid in capital, or sometimes they just call it capital. Paid in capital in excess of the par value on the common stock. So in essence, what we're saying is this common stock, 5,000 shares at a $20 par value, okay, has a value of $100,000. So any money that we receive over and above that, in this case, this extra $20,000, is paid in capital in excess of the par value. So again, cash goes up by the total amount. The common stock account goes up by the par value of the stock we're issuing, and anything over and above that gets listed or as the paid in capital in excess of the par value. So I'll record that entry and look at the second one. Here we issue 2,500 shares of no par common stock to its promoters in exchange for their efforts, estimated to be worth $32,000. The stock does have a $1 per share stated value. Okay, so here's one where we don't get, we're not getting cash for it. Okay, so instead we're receiving promoting value. So probably we'll call this, let's see what choices it gives us. I guess organization expenses is our best category here. I don't love that, but I think that's the best choice it gives us. I would probably call it marketing expenses or something like that, but that's our best choice. So we're receiving organization expenses worth $32,000. It's 25,000 or 2,500 shares of $1 stated value. So I'm going to put common stock, $1 stated value. And that's going to be 2,500 times 1, so $2,500. And then the difference between 32,000 and 2,500, which should be what, 29,500, is just going to be called paid in capital in excess of the stated value, the common stock. There you go. So I'll record that entry. Look at the next one. So record the issuance of 2,500 shares of no par common stock to its promoters in exchange for their efforts, estimated to be worth $32,000. But in this case, the stock has no stated value. So it's just like the last one, except the last one had a stated value of $1. In this case, there is no stated value. This is all weird stuff, this par value, stated value, and usually it has to do with the rules of the state where the company is incorporated. So, you know, it gets listed differently depending on where you're at. If you were doing this in real life, making these entries, you would know the rules and it wouldn't be so confusing that you'd have to read a word problem to figure it out each time. So, so same thing, we're going to call it organizational expenses. 32,000. And then we're going to do, it'll be something like common stock no par value, 32,000. And that's it. Finally, record the issue of the issuance, the issue of 1,250 shares, $50 par preferred stock for 94,500 in cash. So again, my cash is going up, 94,500. And then our preferred stock, let's see, $50 par value, right? Times 1,250 shares. So I'm not going to try to do that one in my head. I probably should, but safe. 62,500 is the value of that preferred stock. So the other 32,000 must come from somewhere, and it's going to be our paid-in capital and in excess. Let's see, of the par value on preferred stock. Just like that. So there's our 4 problems. I hope that was helpful to you. And as always, don't be afraid to reach out if you have a question. I guess we could check our work and make sure I didn't screw it up, because I know I am not above screwing it up. But look, I did get it right. So, all right. Anyway, have a great day, and I hope that's helpful to you.